Okay, so what we're going to do is I'm going to go through a little bit of what I do in the morning once again, give you guys an idea of things. I still think a lot of people are missing the boat when it comes to doing analysis. No matter what we put in the drive, no matter how much communication we have, I really think people are still just trying to click buttons, and that isn't what you're supposed to be doing. There's supposed to be a plan, and I really think you need a plan to execute. So what I'm going to do is I'm going to go through right now live analysis and sort of go through exactly what I'm looking at to give you an idea. Now, once again, this is my idea, and this is another thing I want to stress. What I do doesn't mean you can do. What it is it's to give you an idea of how you should be training your mind. This is the most important thing when it comes to trading, is not going through somebody else's materials or somebody else's trades and saying, okay, that's what I'm going to do. I'm going to follow them. But it's figuring out the thought process behind that and then figuring out what makes it work for you. Okay, so we're going to go through some things. If you have questions, stop me. I'll definitely answer them because this is more of a working session than anything else. It's not really planned. It was just something. I had like 6 groups asking me the exact same question. So whenever something like that happens, I realize there's a gap in the learning process, so we have to address that. Okay, so let's just go through this. Right now we're on a gold 15-minute chart, and I'm going to talk a little bit through this right now. Okay, so looking right ahead, I've already have my support and resistance drawn out, but this isn't for the 15 minutes. So what I'm going to do is I'm going to drop into the daily. Okay, so right away, looking at the gold daily, what I want to look for is I want to look for key ideas. And what I mean by key ideas is I want to look for things that make sense in my eyes or things that can give you information. So as an example, I'm looking here because this is our current state. This is a previous state, and then this is maybe a historical state. Okay, so when we look at the dates, we've got November, we've got April, so that's a couple months ago, and then we've got June, which is our most recent times. So right away, if you've done any sort of science or any sort of math or any sort of course that requires you to provide analysis or do experimentation, what you need to look for is you need to look for patterns or themes. Usually when somebody says, okay, is this experiment in science accurate, you have to go through and see that it's happened multiple times. So when we're looking at specific information, that's what I'm trying to do, is I'm trying to go through the charts and I'm saying to myself, okay, what have I seen specifically throughout the current market that will give me information to what could possibly happen in the future? So right away, what I'm looking at is I'm saying, okay, we've gone through and I've just dissected 3 sort of pieces of information, right? And then I look at what we're at in terms of our range, and I say, okay, 1295, almost 1296 is pretty strong because I've seen across the last, say, 8 months, we've come across and tapped that a couple of times. What does that mean to me? Well, other than this section over here and this thing here, which was the U.S. elections, we haven't crossed that barrier really, other than this information here. We haven't really crossed that barrier in the last 8 months. So when you go through and you start to look at your analysis, you start to realize, hey, on the top end or the highest time frame, which you could work off the daily, we haven't hit past 1295, 1296 in that range. And what I mean by range or zone, let me not confuse things, is maybe it's not exactly 1295, maybe it's 1296, maybe it's 1297, but it's within this area over here where we haven't passed that. And looking at the daily and looking at it a little bit closer as we start to zoom in, and this is stuff that you guys should be doing, is you can see we had a pullback. So we had a pullback on that area. So the open was 1279, the high was 1296, the close was 1294. So you can see we pulled up to 1290 from 1297 in one day, or sorry, 1279 in one day, all the way to 1296, and then we pulled back to 1294. So this entire candle represents one day of movement, right? So this is very basic. One day of movement, we pulled up that hard. Okay? So now what you're going to say to yourself is, based on that information, what does this mean? Well, I can look across, I look left, like we always talk about, and I can see a similar thing has happened back in April. We pulled, and then we pulled right back down. But look at the candle where it started. It only climbed that high and then pulled back all the way down, and that's when we started our trend all the way down through there. Oh, sorry. So when we look at this candle here, what is happening? We don't know yet. There's no indication to give me an idea of what's happening in the markets yet. This candle has been forming since 5 p.m. Eastern. It's been open now for many hours, and we don't have a full idea of what's happening. You can see based on the initial, I guess the initial open or the initial candle, we pulled down right to this level here. Okay? So now people turn around and they'll say, okay, well, is this wick here going to fill, right? Because that's sort of the idea. Or is this wick here going to fill? We are in a precarious position. And what I mean by that is, once again, this is a super high. We have not filled that wick. Well, sorry, let me rephrase that. We filled it and then pulled back. So now, do we have enough momentum to go forward? And this is where, once again, when we talk about wicks filling, we need momentum. In the smaller time frames, we get that because normally, as an example, this upward trend here, if you dropped into the 15-minute or the 5-minute, chances are anytime there was a pull up and then a pull back down, you would have that wick fill and it would continue on its way. But in this instance here, we haven't had that. We haven't had enough information to say that that's going to happen again. So what do we do as a group? We have to determine, does it make sense to make trades based on this information? More than likely not. And that's why I was posting in the group chats, all the various scenarios and the different things that I was looking at was to say, okay, does this make sense at this point? Chances are it doesn't. So when you're looking through your charts, looking at your higher time frames and developing a bias for those time frames will allow you then to give yourself better and more accurate judgment. Because, if we go back and we say, okay, fine, let's take away this candle. So let's say this candle doesn't exist right now. And let's go back to yesterday. If we turn around and we drop into the shorter time frames, so if we go into the hour time frames, and I'll zoom out a bit, you can easily see that as an example, okay, here's a perfect example. This section over here, okay? So this was consolidation. We can all agree that we had consolidation. And why do we have consolidation? It's because it doesn't look like this. It doesn't look like this. That's the simplest way to explain consolidation. I'm not going to go through and say, well, this was a head and shoulders and this was a flag. And is that going to help you in determining if that is that going to make sense to you? Or is it, can you just tell me which way are we moving? And this is what I want to go through, is your higher time frames will always determine your overall movement. The market isn't going to turn around on a dime. If you think of the market, think of it as a giant luxury cruise ship, okay? So everybody's on this big giant cruise ship. We're all cruising in the ocean. Now, when we come to port, the cruise ship has to slow down and it has to maneuver through that port. And what ends up happening is we have to start to slow down. And what I mean by that is everything has to start to reverse. A cruise ship can't suddenly just turn on a dime. Neither can the markets. And that's what I'm trying to explain here. And we can see that happening now in the 1-hour candles, which is a perfect scenario. This is where we topped out yesterday, and now we can start to see lower highs are being made. So sorry, well, you can say lower highs, but lower lows are being made because now we have this movement this way. Is it confirmed? We don't know. But what can we show to give us some indication that potentially we are moving in that direction? Once again, our friend over here. When you're looking at things, you're looking for specifics. You're looking for things that stand out, things that catch your eye right away. Charts are pretty. So things that are very pretty, that's stuff that you want to see. And you want to say, hey, what happened in those instances? What is going on? And is that going to help my analysis? And it's going to provide me information. This is the key. When you're looking at charts, you're looking at a holistic view. And this is one of the reasons why I say don't trade from your phone, don't do analysis from your phone, because your phone will show you this. It doesn't show you all of this. So when you're looking and you're saying, well, Ted, I think it's going to go up or down, what about all this stuff over here? We don't have any of that information. And this is why I'm always telling everybody is to take your time, go through the chart, really do some analysis and say, hey, what makes sense and what doesn't make sense? So now what we can do is let's go through this and let's say, okay, Ted, I want to take a trade, but I don't know what's happening. Can you help me? Sure, I can help you. So what I'm looking at, first of all, is like, we'll go back to this section here. We had consolidation, okay? This was consolidation after a push up. What does that mean? If we go back to our higher time frames, we still had the overall trend moving in. So if we go back to June 5th, so let's exit this for a second, and we'll go back to June 5th. So we're going to go into June 5th. You can see over here in June, sorry, let me zoom in. So you can see here June 2nd, 3rd, and this was June 5th, this was June 4th, this was June 2nd, June 1st. So you can see right away we had a continuation trend. It was up. It pulled back down, but we had nothing to say that the trend wasn't going to continue. You were able to see that information based on here. But once again, this information of this trend was giving you that idea that, you know what, once again, we're moving in that direction. You can even see on the daily time frame, we had a bit of consolidation and a push up. We had a bit of indecision, and now we have a continued push up. And now this is where we're coming to, and we're having a problem with our resistance once again at the highest level. So when we go back into our hourly time frames, just to give perspective, and we'll go back to June 5th. So let me zoom out. So we're back in this range over here. You can then say, okay, based on that information over here, we're still pulling up. And that's where you have a little bit of the dip. And this is where we have momentum. So this wick over here in the hour, you would say, okay, Ted, is this wick going to get filled? And I would say more than likely, once again, we're not going to say it with 100% certainty, but we're going to say more than likely that wick is going to be filled and we are going to continue. But once again, if you look and you say, okay, well, 1 hour, 2 hour, 3 hour, 4, 5, 6, 7, 8, 9, 10, 11, like 12 hours it took for the actual wick to fill. So what does that mean? Let's go a little bit further. And let's do this. So let's erase that drawing. Let's zoom in a bit more. And let's take off this and this. And let's zoom out a bit. So let's, once again, we're looking at this wick over here. So you can see right away, as an example, this wick was the 8 a.m. wick on the 5th. Okay? So what does that tell you? Overall, our momentum is still pushing up. There's been nothing to tell us that there's been a reversal. This bear candle is not a reversal candle. This is not a reversal candle because look, I even have a support level here to signify that we haven't broken that level. So if you were to say, okay, fine, we have a bear trend now, and I'm going to take a sell position, you can see it sort of pulls up, we tap that support level, and now we're continuing upwards. So when people turn around and say, is the trend changing? This is where your key support and resistance levels come in. And once again, you can clearly see that we had a bit of a push through, but once again, more than likely to tap this zone over here. So when you're looking through your candles and you're looking at, you know, specific information and you're saying to yourself, okay, what do I think is going to happen? This is exactly the reason why here, when I put my support and resistance levels, it's allowing me to gauge, okay, is the trend actually changing? Are we actually moving anywhere? But once again, when we look on the daily and we look on the 4-hour charts, there was nothing to suggest that the market conditions were changing because we already had a resistance level higher up. So once again, when things start to move and things are changing, it's understanding how much is that change happening? Is it just a minor pullback to get a correction, or is it actually a total trend change? Now, once again, a total trend change takes many hours. It's not going to happen in 1 or 2 hours. As you can see, there was 1, 2, 3, maybe 4 candles to determine maybe there was a trend change, but what happened? We had a further push up. Even here, as an example, if you look and you say, okay, well, where was the trend changing? Here, there's only 2 candles. Here, there's only 2 candles. Here is actually where the trend actually started changing. We had basically 6 candles, 7 candles of a bear formation after tapping a major resistance, and no other candle came close to that resistance level once again, and we started to pull back even further down. So once again, when you start to look at stuff like this, and you start to look over here as an example, and we go back to right over here, we only had 2 candles that pulled into that zone. The rest of the candles respected your support area, and it started to pull. So when you look over here, it's the same idea. When you start to move to the higher time frames, you start to look and you start to say, okay, are my candles respecting this area? And right now, currently they are. So when we actually go through, and now I'm going to turn it on, move over to the right, and you start to look, once again, when we start to go through, we have a dip and pull, and now we have a dip again. But more importantly, when we talk about wicks don't lie, and this is a coin phrase, the wicks, they're always a little lower than the last one. So what does that mean? It means that we could potentially have a trend changing. But, okay, fine. So Ted, I decided that today I'm going to take a sell position based on this information here. And I would say, great. That's a great position to take a sell position in. And you'd say, well, you know, because I see that there's been a dip, more than likely it's going to go up and dip again. Correct. Now here's the situation, and here's what people are running into is, well, I took a sell position over here, and then it ran all the way up over here, and I got stopped out. Now, perfect. You got stopped out because of, you know, risk management and whatnot. But more importantly, were you putting your support and resistance levels now in that at the right point? So now let's take it a little bit further. Let's go into a smaller time frame, into the 15-minute. Okay, so here we are in the 15-minute frame. Once again, we can identify where we were in the top levels. So here's our top portion right there of 1296, basically. But once again, now you're starting to look at smaller candles, closer candles. So the people that turned around and said, oh, you know, I got stopped out last time because of this candle. This was basically your candle formation over here, trying to close this wick right here, which it actually did. It tapped and it closed and then it pulled back up. You can see here is where you're putting your levels, right? Here here's where you should be putting your stops, up over here. You can't put your stop right here. It makes no sense. You're in the middle of a candle. Even here is tight because you can see the levels. You can see when you look left and you look at the levels, you can see where potentially price will touch again. This section here, this section here. So once again, if you turn around and say, okay, so Ted, where do I put my stops? I'm going to take a sell position right here. First of all, I would advise against it. I wouldn't be taking a sell position there. I'd be putting a pending order here. Why? Because of this wick. And if this pending order then starts to pull down, we have full momentum, more than likely looking across, probably maybe to this wick here, but even maybe, you know, potentially this wick over here, but going into the higher time frames, maybe we're going back down to this level. We don't know. But taking a position right now here at 922, is it the most smart thing? Maybe, because we're coming towards the New York Open. So, you know, things are moving. But once again, this is where I'm putting my stop. I'm putting my stop up here. This is where my stop is going. So if I take a sell position right now, I'm expecting, let me just grab my pointer out. I'm expecting a potential retrace all the way up here, 275 pips. So that means 275 pips, probably we're at 300 down here, so you have a 1-to-1 risk to reward ratio. So don't expect it, don't put a stop loss at like 80 pips and then say, oh, I'm going to try and get 400. Chances are you're going to have an issue here with this price level because institutions are going to be looking to tap that range again and then pull right back down. So keep that in mind as you're placing your stops. Look for major price levels, and even at the same time, if you get stopped, what's the big deal? There's not a big issue. So now you say, okay, fine, Ted, you've given me information. You've told me that there's a potential sell because, you know, we see higher or lower lows or lower highs being created, right? You can see that clearly based on the last few 15-minute candles. So now what I want to do is I want to go into the deeper charts. I'm going to go into the 5-minute charts now. And here's where it gets even more interesting. So right away, what do I see? Consolidation. I saw a drop, pull back, pull down. So look at this zone right here. Look at the strength of this candle right here. So do we have momentum? Probably, because look, we dropped up, dropped. So what am I looking for here? Momentum to drop down and tap this zone here. And what do we have in that zone over there? That zone is basically 1288. We're at 1289. It's 925. More than likely, this will complete for the New York session. Now, once again, if I'm entering this candle right now, I'm going to get stuck in a price level here. So maybe I put a sell stop right here, let it pull through. So if I put a sell stop right in there, I'm going to turn around and say, hey, I'm putting a sell stop right here. I've got 100 pips right to this zone here. Or even if I want to cheat a bit, I can take 70 pips and I can say, okay, hey, let's put the zone there. Let's grab this section right over here. I'm going to put my sell stop here, my take profit here, and then I'm going to put like my stops over here in this zone here, just so that we can see that these wicks over here will be filled. More than likely, you can see if we go through and we look closely, this wick was filled by this wick here. But when we tapped this zone, we had a violent pullback and then a drop back down. Then we had an even bigger pullback, and now we're dropping back down. This being the new zone here, more than likely we're going to go back into that zone there. But these are things that you have to start to look at, and when you start to go through, you're able to understand and say, hey, what makes sense and what doesn't make sense. But this 5-minute chart, this whole stuff here, I didn't do any analysis on this chart. I had already formed my basis on the higher time frames, and I went through and I provided information from a top-down approach. I went through my daily, I went through my hourly, and then I went through 15-minute, and then I finally went through 5-minute to give me that information to say, hey, what is exactly going to happen here? And now, am I am I pretty confident that this is going to happen? More than likely, I am confident. Just based on what's going on, based on the time of the market, based on everything, we can sit here live and I will show you that this area here will probably come over to this area there. If I'm wrong, well, so be it. It wouldn't be the first time. But just based on what we're seeing here in terms of momentum, we have this downward trend and we have another downward trend starting, we more than likely will move to that level. Now, if you want to get really, really technical, what we can do is we can jump into the 1-minute charts. And now what we can see here is we can see even closer. We have a major zone that was just tapped, so we're getting momentum now to push down. And then we have this zone over here, which is similar to what we were looking at in the 5-minute to say, hey, are we moving there? We have a tiny zone here. Will that be filled? More than likely, because once again, we have momentum. So we're at 4 minutes before New York Open. We can take a look and we can wait. But what I want to show people is I want to show people sort of looking at various zones, looking at what's happening and where are we going. But more importantly, understanding that the zones that you're looking for, different price zones, in the smaller time frames aren't going to be as significant as they are in the higher time frames. And what I mean by significant is I mean that, we had this tap here and now we have this pull up, right? When you start to go into the 15-minute frame, it's still, we're still pulling down. We still created a wick. There hasn't been a full gauge of that wick where we've pulled all the way back. So when you see the 1 minute starting to pull up, this doesn't mean that it's a bull trend. This just means that the price is being collected in this zone for a potential pull down, because as more people are starting to sell, prices, you're forced to get a worse price, right? It's supply and demand. That's exactly what these items are. These are supply and demand, and this is what you're looking for as you start to go through. All right, so there is a question. Oh no, there was just a hand up. Okay, so we don't have a question yet. But once again, so here's an example where we had, and I'll go through this rather quickly, is, if you turned around at 1289, now you're at 1290, you're almost at 90 pips, 100 pips. We pulled back 100 pips like 2 minutes before the market opened, right? So once again, timing of your entries is also important too. I wouldn't be taking, if I took a sell position here, I would have to potentially expect that there is going to be a pullback or there's going to be, a retracement. Where is that retracement going? Once again, I'm looking at my 15-minute candles and I'm saying to myself, if I took a sell position here, I'm exiting over here, or technically over here if I want a longer entry. That's what I'm looking for at this point. So I said, okay, I'll take a sell position right here. What am I looking for? In 1 minute, we're going to see how the market's going to move and what's it going to do. But here's where my stop loss would be, and here's where my upper stop loss would be if I was, going to hold this for a little bit longer, thinking that, the overall trend now is going down. I want to jump in early. I don't necessarily have full confirmation, but, this is what I wanted to do. So we're at 929, and now we're going to see market move probably in a minute. It's still fluctuating between, I would say 1220 or 1290.20 and 1290, 30, 30, 40, almost, I would say. It would pull up to 40, yeah, so there it is, 45, 48. So this is where we're going. So we're starting to see a movement, and now here's the actual move at 9:30, and this is where you're going to get the full bulk of the movement, and this is where we're going to begin. Okay, so there's a question here. You said that the stop loss should be placed on the last higher lower high. I should not take into account the percentage of my account that represents. Well, of course, you have to adjust your lot size for that move. So you have to say to yourself, okay, if I'm putting my stop loss at that level, I have to make sure my account is, I'm using the proper leverage of proper amount in my account that allows my stop loss to be that high. So, if you're doing a 200 pip stop or 100 pip stop, you have to reduce your lot size. That is, a standard thing where we're saying, we should have that information. You should already know that. So if I'm planning my trade and I need a 200 pip stop loss, I have to adjust my lot size before I enter the trade. And this is what people are failing to do, is they're not doing that information, they're not doing that correctly, so they're getting stuck in trades, and people are saying, well, when should I exit, when should I enter? Like if I had already entered, and you can see right now this is what's happening. So I entered over here once again, I entered in that area, you know, I'm still okay, because once again, here's my stop. I'm still okay. I'm still sitting here waiting for it to move. I don't have any issues right now. There's no issues to hurt me in this regard. And what I can say is I can turn around, so I'll keep those markings up there so that we can see it. But as I start to go in the 15-minute time frame, we can see that there's been consolidation here. So there's been movement in terms of consolidation. We pulled all the way back up, and now we're starting to move a bit. But you can see right here in this, I guess I don't want to, well, I'll do this. In this section here, you can see that we tapped the price zone, and now it depends on what's happening with this zone, if we're going to break it and push back up, or if now it's going to be more of a drop again in terms of the overall market movement in the direction we're going. So what I'm saying here is, once again, is this is consolidation, but does that mean that we've started a movement up, or does that mean that we're just grabbing orders to fill this wick here? Because overall our goal is to fill this wick right here with the in the 5-minute candle, and even in the 15 minutes. So we'll go back into the 15 minutes, and we'll still watch this. So you can still see there's indecision on that 15-minute candle, and there's been nothing to tell me that direction has changed. It just seems like the market's moving slow. And once again, this is part of your analysis. This is what you've done, is you've placed your trade, you've done all the analysis you can, you just have to let the market do what it's supposed to do now. And you're going to say to yourself, okay, well, which way is the market going? Right now, it's still indecision. It's fighting that specific price level. We've just opened the New York session, the New York stock market. So, you know, potentially there's movement going on, but I'm not concerned about my trade. And this is, I think, the biggest thing, another big takeaway for everybody is, if the trade goes the wrong way, I'm fine with that. Because what did I do? I did my analysis. I did everything that I possibly could to say that, hey, this is what I think is going to happen. If it doesn't happen, then I go back and I say, well, why didn't it happen? So as an example right now, I can say, okay, maybe I shouldn't have entered at 9:30. Maybe I should have waited for more confirmation if it doesn't go my way. Maybe I'll say, hey, the trend wasn't strong enough, we were still ranging, so that doesn't make any sense, I shouldn't have entered here. But once again, I've gone through enough of my analysis, and I've seen this happen enough times to say, okay, I believe that we should fill with that momentum because we're on a smaller time frame. We have momentum going. We've shown the lower highs, or you know, technically the lower low is happening. So now it's just a matter of letting the analysis work and watching everything move on its own. So once again, our target is this level here. This is our target levels. So if we want to get technical, let me do something. So my target is 1288.47. We're at 1290.30. So basically I'm at break even still, and I'm looking for about 170 pips. Okay, so that's essentially what I'm doing. I'll keep this running, and then we'll see what happens as the trade goes through. But like I said, I want to keep this running. If there's questions, we can talk about it, but I'm going to keep this open just to watch the analysis play out, and just to give everybody an idea of, you know, what I'm doing on a daily basis, but also more importantly, what everybody else should be doing on a daily basis to say, hey, why is this happening? Why is this making sense? And this is so important that you understand the timing of the market, the way the market moves, how the market's moving, and why it's moving. And the why today for this lesson here, for this webinar, was we were at a major resistance on the daily. So more than likely we need exhaustion to come back and say, hey, this is what's happening right now. We need to pull back a bit, and we need to say, hey, this is not going to continue because we don't have enough power to continue. Now, once again, the opposite side of the coin, and the argument can be, well, Ted, if Trump tweets something, it's going to send the market into a spin. That is correct. It is going to send the market into a spin. We have to be aware of that. Once again, it's the reason why I have my stops and my take profits, because I want to make sure that my account's protected, but right now I'm going with pure technical analysis based on history, based on reviewing what we've seen happen, and based on what I think is going to happen now in the future. Okay, there's a question here. So you're specifically not looking for candle formations, you're just looking for prices tap certain levels and enter with the bias, directional bias. Yes. You know, candlestick formations are great. You know, if they help you and they teach you something, that's fine. But what I want people to realize is somebody at like Morgan Stanley or JP Morgan, they're not saying, hey, let's look for a head and shoulders pattern today, guys, when they're having a team meeting. Like they're not doing that. That is a way for you to identify like how things are moving in the market, to give you an idea of what's happening, and why things are doing what they're doing. But it doesn't necessarily mean that that's what's going to happen, and that's, you know, sort of the key indicator that this is now going to happen because that happened. So what you have to remember is you have to say, hey, does this make sense? What am I looking for overall? And what is my plan? You know, what am I looking for in terms of my plan? Now you can see, you know, as we've been talking, the market's been moving, and we did tap down to that almost to that price level. So we tapped, let me see here, let me close this. We can say we tapped to 1289.03, and that was basically, you know, 120 pips. So yeah, you know, technically speaking, you could have closed at 100 pips there, and you would have been done. But you know, we can hold this trade open more, and you can say, okay, this, you know, this is still going to push down. We've created now a wick. Once again, you know, going with momentum, wicks will need to be filled. But now here's the question, and here's where your analysis needs to take over, and here's where sort of a, not a prediction, but a judgment call needs to be made. So you can see we pulled all the way back to that original level. So in about 10 minutes, we've dropped and pulled back an original level. This is a 15-minute candle. So here's a tip. More than likely, the 15-minute candle will still continue into the next 5 minutes. So what we see here is we see this pullback of price, but we still have 6 more minutes in the candle. So when you start to look and say, okay, well, what's happening? This candle's pulling all the way back, Ted. What is going on here? You can then drop into your smaller time frames and say, okay, let's look in 5 minutes and let's see what's happening in a 5-minute time frame. You can see right away the 5-minute time frame. This last candle right now is almost creating like a weird indecision candle, but the candle before it, it hasn't gone higher than that previous candle yet. So we haven't closed above that last candle. It's fighting to get there, correct, but we haven't hit that last high. So if you look and you say, okay, you know, I'm worried that, you know, we're going to get stopped out, I'm watching to see that this candle here, this wick, doesn't pass the last top of that wick there. More than likely, if it doesn't, we should be okay. Now we're going to watch the next candle and say, okay, well, what's happening here? Does this make any sense? Now you're going to start to see movement and start to see change, but is that because we're entering the last half of the hour, or is that because we're consolidating again and we're starting to move? So you can see we have big wicks here to fill, this being one of them. So potentially this last 5-minute candle could drive down because we have momentum on our side. We didn't fill that previous wick here where, you know, we had price going down, and you can see based on what we currently have, we had this consolidation here, and now we had a bit of consolidation again. Are we rocketing back up, or are we pulling back down? So once again, this is your gauge, and this is what you're doing as a trader, is you're saying, okay, I've taken a trade, I've turned around, and I'm now back on my 5-minute time frame, or sorry, my 15-minute time frame, and I'm letting my trade do what it needs to do. And at no point am I worried. And this is the key, because once again, like I said, we've done our analysis, we've provided information, and we've said, okay, this is what I expected to do. New York Open happened, it pulled down, and now it looks like there's been a price tap, and we pulled back up again, but there still isn't movement the opposite direction. And this is what everyone has to realize is we don't have movement in the opposite direction yet. Maybe the next candle gives us that movement, maybe it doesn't. But right now, I'm still not worried about my trade. In general, I wouldn't be worried because I have a stop set up. If I'm wrong, I'm wrong. But more importantly, the candles themselves, they're just moving the way they're supposed to move. So if I'm sitting here watching this trade, I'm still okay because we have 4 minutes left to go in terms of this 15-minute candle. More importantly, we don't have, as an example, this wick here has never popped anywhere close to here or even over here. So really, I don't have any concerns. I'm not really concerned about this trade at this point. I'm letting it exhaust. I'm letting it do what it does. But in the last 10 minutes, we haven't seen anything in terms of like what potentially could happen, or if we're going to pass that wick. The next question is, what time frame do you manage your trade usually? The time frame you enter on the 15 like you're showing now? Yeah, I'll enter on the 15. Sometimes I'll enter on the 5-minute. But like I said, I drew my trade where I would have taken my buy, and I put my stop loss in, and I put my take profit, and I let the trade run. And that's what I've done. Technically speaking, I would have already closed the trade because I would have wanted 100 pips in this respect. But right now I'm trying to go for 170, almost 200 pips. So what I'm trying to do is I'm getting I think it's a 1 to 2 risk to reward. So give me a second here. Yeah, so I'm doing actually a 1-to-1 risk to reward. So I have 100. I have 180 down and 160 up. So yeah, technically speaking, my stop would have been a little bit tighter if I only wanted 100 pips. I would have gotten my 100 pips and I would have already exited. But if I was doing a 100 pip gain, my stop loss would have been here. So once again, it would have never been hit, and my take profit would have been here, which would have already been hit, right? So if we look closely, we can see the wick did go further down in the 15-minute than my 100 pips, so I was able to gain that at that point. So once again, and that's, it's managing your trade and saying, okay, what do I want? Normally I go for, 100 pips or 10 standard pip gains. It would have been successful. Now we're going for a little bit more, so I moved my stop loss up a bit, and we'll see what happens there. Do market opens push usually respects support and resistance, in my opinion? I've noticed sometimes it does and sometimes it doesn't. Yeah, so I mean, in this case here, once again, there is news at 10:30. So when we turn around and we look and we go into Forex Factory today, there is news at 10:30, crude oil. So that might play into what's going on here with the market. So I mean, you keep that in mind as well. But once again here, I'm not really worried about my trade. It looks bad. It looks like it may fail, but at the same time, I'm not. If it does, it does. But I wasn't really concerned at that point because I'm still focused on my overall idea of what's going on, which is this and this and this. So if we barrel through all this and then we're coming back up here again, this was all this sort of consolidation and a fake out in that respect. If that's what exactly happens in there. If we say that this and this was just an anomaly and it was a pullback for a push right back up, that's fine. I'm okay with either. But once again, I've seen it enough to say, hey, this for the last say 2 hours, 3 hours hasn't been touched again. We tried, we failed, we're trying again, and it looks like we're failing again. And that's sort of the key here in this respect. What you may find is at the point at 9:45 going into 10 o'clock in the morning, we may have a wick fill at that point, just to close out the hour candle and get a full bear push. Once again, we'll have to see and we'll have to go through that. And like I said, we're staying on until this trade either hits a stop loss or take profit. But once again, here we look in the hour, you can see once again in the hour and looking a little closer, we still haven't finished this wick here. So this wick here is still a little lower than that one. So let me zoom in a bit. So you can still see here as an example, we are still in that level where this wick, this wick, this wick, we're still in that direction of that going down. You know, what one can say is one can say that, hey, this wick here is still higher than this one, so we have an issue. I don't disagree, but once again, I don't have enough information to provide to say that, hey, now we're moving in this direction here. All I see is we've had this pull back to sort of fill this one, and now we're going to start moving there, get a little bit more information as we go through. And I just erased that. That wasn't too smart. Let me go back in. Shoot. Sorry about that. Let me zoom out. Let me go back in, and I should have drawn lines. So my stop, then I said over here, and that should be right because I said I wanted 170. Okay, so it's a little less. Okay, so let me wait and see how this pulls up. All right, there's not a question. Okay. Okay. So now, if you were managing this trade and you're deathly afraid of the market moving in the wrong direction, what I would suggest is if you really want to sit there and watch, you go to the 5-minute candles, and now you can sit in the 5-minute candle and you can start to see sort of what's happening here. We did have consolidation, we did have a minor breakout. More than likely this 5-minute candle will fill this wick because right now we have a small bit of momentum. But more importantly, what I'm still looking at is I'm still looking at that overall trend. We still have the wicks being respected there. This 5-minute candle is now almost closing, and it's starting to push in a bull formation. But once again, there's not enough momentum, based on just the overall movement to say that we're going to have a continuation in that. Like I said, I'm still aiming for the wicks to be. I would say. I'm going to erase all my drawings again. I'm still expecting all the wicks to be filled at that point, and that's what I'm going on still with my same bias. Let me do this. I'm going to do this. I'm just going to put in a, yeah, okay, so that's, I'm just getting this set up like I had the last time so that I don't have to, okay. All right, so let's do that. All right, so that's a little bit easier there. And we said we wanted our stop right about here because that was, yeah, so we were doing about a 1-to-1. So that was our stop and that was our take profit. Or sorry, that was our stop loss and that was our entry point. So right now our entry, we are about 100 pips out. So once again, it is what it is in terms of analysis. As we discussed earlier, if you wanted to say, hey, We were looking for 100 pip down. We did get the 100 pip. Now we're looking for a little bit more. So now it looks like it's pulling back. More than likely, we're going to get tapped out at this point. Or maybe not. It's, it seems like we have enough momentum pushing up to get tapped out. Now, is that a bad trade? No. We went in with the notion that this was sort of our analysis. One can turn around and say now, as we start to review a little bit, that this is a bit of a trend line here that's starting. So maybe potentially we should have moved our stop just a little bit higher to avoid that altogether. But once again, we don't know this information until it actually happens, and until you actually start doing some back testing, until you dissect things. But once again, it's the process. And the reason why I'm doing this live is I want you to see that, even though, I trade well and people say that I'm a good trader, this is my analysis. This is what I'm doing. If I get stopped out, I'm comfortable with that. But more importantly, I went through the notion of why I was doing what I was doing and why I was taking a trade, or, how I was doing what I was doing, to make sure that, people are aware of that was my thought process at that point. And we are tapped out. So we stopped out. So there you go. So we tapped out there, looking at the higher time frame. So now it looks like we've created a large, almost a bull candle. So it's pulled all the way back up, and now it looks like we're almost starting like a rocket ship to go up to the next level. But still, once again, it's still at an indecision point. We're still at a point where, there isn't enough confirmation to say that we're going the other direction yet. There's been, a lot of consolidation and a lot of ranging. Going back to the 15-minute, we're still propping around that level. So now the next idea here is to say, okay, what happened there? Well, once again, we pulled all the way down. We tapped into this zone, which is a major price point. The zone was rejected in the sense that, it didn't want to pull right down right away. So we pulled up harder into this price zone here, which was this one, and probably this area over here to come across. And now it's pulling back down. But with momentum, we'll see what happens overall with the way that the market moves. But you can see here as an example, I set my stops, I set my take profit. If I had set a smaller take profit amount, I would have been safer. But that's always the case, right? So it's always what it is, if I had done this, this would have been easier. But once again, it's, I didn't know that at the time. I didn't know that this was going to happen the way it did. And this is why I did it live, because, if it worked out, I'd be a hero. If it didn't work out, now I don't know what I'm doing, right? So it's the balance of what you're doing. But what I'm trying to say is, when we start to place our starts and our take profits and our stops, I want people to have an understanding of why you're placing them and where you're placing them at that time. I think it's important that you have an overall plan, and that's what we just did. We executed a plan. It didn't go according to what we were supposed to do, but there was no harm here. I didn't get to a point where, as an example, if I have a stop and I see it going up, it's like, okay, well, what do I do? I already knew what was happening over here. It was already getting stopped out. I know that. I know over here I was taking profit, or whatever, whatever the issue or the initiative was at that point. It's just making sure that you don't ask people in the chat rooms, or you don't ask yourself, what should I be doing now? The trade was executed, we were comfortable, and then we moved forward, and we accepted the result. There's a question here. Did you think that pair did a stop hunt only to come back down? Not necessarily. So here's a thing with candles, is we're coming towards a 10 a.m. candle. The 10 a.m. candle is a major 4-hour candle for gold, because gold stops between 5 and 6. Oh, I think my audio was cut off there. So gold stops between 5 and 6, so there's an hour difference between a normal 4-hour candle for a currency pair and gold. So now we're coming up to a major 4-hour candle with gold. So that could be a pullback, a push up for one last pull in that direction to get better prices. So it could be a stop hunt. or it could be a pull up to say, okay, that's where we're heading to next hour. So this is where, once again, you evaluate that and say, okay, where is our momentum? And if we start to go through and we start to look at the overall trend, once again, we were still in a bearish bias, but once again, we're looking over here and we're saying, okay, in our 5 minute candles, what do we see happening? What is going on? So yeah, you can see the question there was this a stop hunt over here? Potentially, because of the fact that we have this what I would consider like a minor resistance level. But once again, do we have any information or confirmation on that? No, because who knows? At 10 a.m., this could be the beginning of the bear trend up, or sorry, the bull trend up. And if you want to go with it and you want to say, hey, does that make sense? Look at our 1 minutes. So our 1 minute candles, they're giving us indication here that we may be starting to push up in that instance. We've now broken this resistance level here. So there is a potential for that. Or, maybe we're going to tap out and then we're going to shoot back down. But because I've seen some of this before, this looks to me that it could be a potential breakout in the upward motion. Just looking at now this being a major price level, price rejection, and now we've never come back down. We've had that continuation push up. So now, you know what, the analysis was off in terms of what we were doing, and essentially what we have to look at now is saying, okay, which is going to win, this level or this level? And how do we know which level is going to win? The next question can be London reversal. Will we come back and tap this bottom level again before we shoot back up? Yes, there's a potential, but I mean, once again, when you look in the 1 minute, you have a lot of big zones to say, hey, that there is a potential, there's issues in the way that the market's going to set up. So we'll keep this on till 10 for the next major candle, and we'll see exactly how this is going to start. But it looks like now we're starting to pull up a bit, and we can say, okay, where's our next major resistance? You can say at this point the next major resistance level would probably be right about here. You're looking at price zones over here, which we've tapped over here, and now we're looking to see, okay, what is going to happen? Are we going to have that price pull, or are we going to shoot back down to this price level here? And that's the 10 a.m. candle, and that's what you're looking for. So when you're looking at various entry points, this would be something that I'd be looking at as well, is, right away, because our initial idea didn't work out and we're saying, that we have this this setup over here. Now you can say, okay, hey, is it potential that we're now pulling down, or is this based on the 1 minute candle, a consolidation to a breakout, right? Because this is essentially what's happened here. We had a bit of consolidation, we had a breakout, consolidation. Now at 10 a.m., are we going to have this breakout? So we'll take a look and wait and see. Somebody did ask to see a USD JPY chart. Chances are USD JPY will be the opposite of this, so we'll go through that in 1 second. I just want to see what happens at 10 a.m. if we do have that initial push up with the new candle forming, or do we pull all the way down? Let's see. So we got less than a minute. And all right, so the 10 a.m. candles just started. Let's see where we go. So now it looks like we're dropping down into that 5 minute candle again. So this is how I would be watching a chart is, where are we moving to? We've pulled down a bit, and let's see where we're going to go. And it's really pulling hard now. So if we dropped into the 15 minute, we can start to see now, it looks like that level was respected so far in terms of where we had the stop hunt that was called out earlier. I mean, more of just a price tap and then a rejection. So potentially we could be going to that level. Ted, can you do for a USD JPY for a chart? Show me where you would put your zones. Yeah, okay, we'll do that. All right, so looks like we're pulling back up, and now we're going to continue in a further upward motion just based on the way the candle's forming. So let's jump into USD JPY. All right, so my USD JPY chart's a little messier, but once again, what I'm looking at is at the daily. Um, we still have a bit of indecision on the dailies, but once again, it is pulling up. So what that means is the US dollar is strengthening a bit, which coincides with this lower price point. So when you start to look right away, what I start to see is this area here is now lower than that area there. That's my initial thought process there. Excuse me, at that point. I'm looking over here at price levels. That's sort of what I'm looking at here, various price levels. This being a big one here. So, you know, my idea would be then this price level is probably going to tap over here in this zone here. So that's what I'd be looking for at that point. That's what I posted the other night. So now when we go into the 4-hour, and you start to look at the various levels, 4-hour zones are pretty straightforward. You can see right here, there was a huge zone where we pulled up. Here, you know, you can almost say that this was a zone pulled down, and now we have a price point here, right, where we tapped, and now, you know, potentially we could be pushing down. But once again, we don't have enough confirmation of where that is going. But now, if you're turning around and you're saying, okay, fine, if we're going to go into our shorter time frames, if we start looking again, once again, we have the same sort of issue where, you know, you had consolidation here and we had a drop, and then we had to pull back up, tapped resistance, tapped resistance, tapped resistance, and now we're starting to pull back down. Once again, this is to coincide with, so this is our 15-minute on USD JPY. If you go 15-minute on gold, you can start to see the same thing, as the opposite thing is happening. So we had to pull all the way down, and now we're starting to pull back up again. So it's really, you know, determining where we're going. Once again, gold will always move before USD JPY. So if we see right now USD JPY or gold, it's sort of stalling here in this section. You can see that it's still stalling. When you go into USD JPY, you will see similar things happening. So you can see here, we're stalling as well. You wouldn't enter now, though, now since volume is going to start dying down. Nope. I mean, once again, I'm not trading at this time. I took my trade at that point where I would have taken a sell position, and I would have went, and if I got stopped out, I would have been done. I wouldn't have taken another trade. There's no point. Now you're chasing. You remember, when you're trading, you have to do your analysis, and I just did my analysis, and I said this is what I was doing. You can't say, oh, now it's going down, I'm going to get in the trade. It doesn't make any sense. You're going with specific information. So I was going with the fact that there was the U.S. Open, the New York Exchange Open, so I'm hoping that there was going to be a bit of movement there. I'm going with the fact that, you know, the overall trend was down. That's the information that I'm going with at that point. If the idea doesn't work out, I have to quit. I'm not going to go in and try and chase a trade because I was within my risk parameters. You know, I had a 1-to-1 risk ratio. There was no issues with me losing that trade, and I think that's another hurdle mentally that you guys have to get in terms of the idea behind trading is saying, hey, this is my idea. If it doesn't work out, I'm okay with it. I'm okay that I lost. The key here is, why did I lose? And that's the thing. And you know, like I said, if I won, I would have said, okay, my analysis is correct. If I lost, now I do my analysis and I say, why did I lose? You know, these zones are a lot stronger than I thought. Um, this level here, it's not, we're not ready to drop from this level yet. We're still fighting. So you can see even here, we're still ranging in that area. We haven't really had a move. So you know what? Maybe at the end of the day, this trade wasn't as good of a trade as I thought. Maybe I would had to wait a little bit longer. Now that you can sort of see, it's starting to push down again, it's still not at the level that I had bought, that I originally sold at. So, there's a lot of confluence there, and there's a lot of things to say, hey, what am I looking for? When I'm entering my trades, I'm looking for specific times. I'm looking for specific entry levels just to, provide myself with some guidance there and say, hey, does this make sense? If it does make sense, that's what I'm doing. If it doesn't make sense, then I have to exit and I have to reevaluate what I did. And more than likely, if I'm wrong, it's okay because it didn't hurt me financially. It didn't cause me any harm because I was within my risk parameters. Because tomorrow I could wake up and I could take a trade and that would erase the loss. And you as a trader have to start realizing that not every day is going to be the best day to trade. Not every day you're going to have a winning trade. But more importantly, if you're within that risk profile, this shouldn't phase you at all because this is basically just, hey, it didn't work out. If it does later, I can say, hey, okay, what could I have done better? Maybe I had to move my stop a bit. Maybe I had to move my take profit down a bit. So, instead of having my stop at this level here, maybe I should have had it at this level here, and maybe I should have take my take profit at this level here. These are things as a trader, even myself, I'm still learning as well. Every day I learn something new, and you as a trader should not be discouraged. The idea, once again, is capital preservation, managing your trades, and making sure that you're giving yourself enough information to make the right decision at that given time. So once again, I went through my scenario and I said, I looked here, I looked here, I looked here, now we're looking here. Maybe it's going to go down over here later on today. I don't know. It did not work out. I'm okay with it because I did my analysis and I had my risk in place. If it did work out, great. And it could have worked out for some people because essentially you could have said, hey, I'm going to take my take profit over here. And you started over here, take profit there. Yep, there you go. Perfect. You would have been successful. So it's all in managing your trade and it's all in determining what makes sense for you and what's easier for you to manage at that point. Okay, so I'm trying to see if there's any more questions. I think I went through USD JPY. We can go through that one more time. You can see here, once again, I've already mapped out a lot of this stuff just because I trade these two pairs. So you can see I've already, determined, like, we did tap a zone there, and now we're starting to pull back down. So with that being said, we don't know how hard we're going to pull because once again, we have this price level here. This is a key price level. This was a key price level here. Maybe we tap to this price level and then we shoot back up. We don't know. Once again, if you go into the shorter time frames, jump into the 5-minute, you can see in the 5-minute frame, we're starting to get a little bit of exhaustion in the 5-minute windows. And you can see here as an example, if you wanted to look a little bit further ahead, this wick over here potentially needs to be filled. So, there is a potential to say, hey, with momentum, we may have that wick get filled because we just tapped into a price zone over here. So now we need to get out of that price zone and we need to push up. So those are little things there, but you can't trade off the 5-minute window. You can't say, well, now I'm going to take a buy here because I can see this wick being filled. Because once again, when you're looking at things like that and you're saying, okay, this is something I should be doing, look at it closely. You got like 50 pips maybe. Then you have to figure in your spreads. You have to figure in, okay, well, what's my stop? My stop is 50 pips. So like I'm literally on the edge of everything, trying to get that trade. So what's a better trade at that point? What are we looking for? We're looking for things that have bigger ranges. That's why I always tell people, work off higher time frames to give yourself a better idea of what's happening. And like I said, if you think things are going up, put a buy limit here or put a buy stop here. Let the trade come to it and continue on its way. Don't try and take a trade here and say, well, I think it's going up. Because then when it goes down, you're going to say, oh, now what's happening? I don't know. So put yourself in pending orders to give yourself an opportunity to get that. Do wick fills only work with momentum? Well, yeah, because that's essentially what wick fills are. Once again, wick fills are when price taps a certain region and it pulls back and then it goes back to touch it again. That's what it is. It's this price filling up. It's this price filling that region. If you know the reason why it was coined a wick fill is because more than likely when you look to the left, that candle wick now is filled with a body of another candle. But it's essentially all it is price being rejected. It taps into that zone, being rejected, pulled back, and now price goes and travels to that area again. That's the reason why there's momentum, because what ends up happening is people say, hey, you know what? The initial price, as an example, I liked this initial price, but nobody else did. So it was an initial tap, and hey, now I'm going to go back down. I'm going to get more orders, and I'm going to go back up. That's all it is. It's just price filling. That's it. So don't get confused over this whole momentum and wick and all this stuff. It's understanding what the market is doing. The market tapped this price and said, hey, I don't really like it at this point. I'm going back down, and now the other candles will say, hey, okay, we're going to go back up to that later on based on the overall trend. Overall trend creates the momentum. Right now, we're in a very difficult spot, like I said earlier, because trend is, starting to shift, but we've hit a major support level. You can see here we tapped a major support level. So do we know if we're going back down here? We don't know for sure. But you can see right across all the way up until November, we haven't hit any lower ranges for a while. So there is potential that we could be moving into another direction. But working off a daily candle, we don't need to take a trade today. You can turn around and say, hey, I'm going to take a pending order in this level over here. I'm going to take a pending order right here and ride it up into this level. I can do that. I don't have to trade today. I can set my trades up for tomorrow. And those are things and key observations that you need to do and figure out, hey, has the bias changed? If it hasn't, I'm going to take a sell stop. I'm going to put my sell stop here and my take profit here. Why? Because this area over here, more than likely, will probably touch that zone again if we're going in the downward push. So this is a perfect example for people that say they don't have time to trade. They're busy throughout the day. They're not able to get into these sessions. Set your trades up according to what you see in the overall momentum. If you think we're moving up, set buy stops in the momentum of up. If we're moving down, set sell stops moving down. You have to set yourself up to win. And doing that is looking at the charts and seeing where the overall trend is going. Like I said, if it's going one way, set yourself up accordingly. If you believe it's going the other way, set yourself up accordingly. If your sell stop doesn't hit, you can delete it. If we move up all the way there, that's fine. Just delete this. Who cares? You were wrong. It's not a big deal. What's worse is saying, going into, sorry, a second here, going into your 15-minute frame and saying, okay, well, I'm taking a sell now over here. I'm taking a sell. And then, it pulls down a little bit and then it shoots all the way back up. So now what? You're going to sit here and say, well, okay, well, this was consolidation, so maybe it'll start to pull back down. Okay, well, no, this range now it'll start to pull back down. You don't know what's happening over here, so don't put yourself in a situation where you can fail. Put yourself in a position where you can win. So, if I say in this area over here, I believe that we're going to go up, put your position here. Let it activate. If I believe it's going to go down, put your position here. Let it activate. Don't play the guessing game in this area here. This is like, we've already seen what's happening. We're already seeing what's happening. So don't do that. Give yourself an opportunity to win. Set your positions and let them run that way. Okay, so I think that I don't have any more questions. I think we've done everything we needed to do. We could probably go back to that gold trade and see where we're at. I'm pretty sure we've flown up. Yeah, so we've gone up just a bit. It's starting to pull up a little bit more now. So more than likely we're going to go up and you can say, okay, at this point, more than likely we're going to go to this range over here, just based on what we see. And that coincides with USD JPY going down. Excuse me, once again, we're not 100% sure. So set yourself up, put pending orders in, let them hit, because if it is correct, you're going to win overall. If it's not correct, you're going to get told right away that it's not correct. So really set yourself up in that position. Get used to putting pending orders in. Get used to setting yourself up and saying, okay, what is my idea for this trade? Having your take profit and your stop loss, and respecting the trade. When it's done, it's done. If you win, you win. If you lose, you lose. Take the information that you got from that trade, whether it's a winner or a loser, and evaluate what I could have done better, or did I do the optimal thing. So right away, if I looked at my trade, I would have said, you know what, I should have just gone for my 10 pips that I went for, instead of going for 170. So that's fine. I accepted that. I was a little too overzealous with the trade, and it cost me. So now I know, go back to 10 pips instead of trying to get 17. That's basically what you learn from these experiences. And once again, maybe I'm not trading the New York Open. Maybe I don't believe that I should be trading that. Maybe I could have essentially traded before that in my 7 to 8 a.m. and taken profit down over here as well. So I mean, there's opportunities to be learned, and said, okay, maybe I could have gone here, or maybe I could have taken buys and gone up there. So there's opportunities, but it's understanding what went wrong and how to correct that so it doesn't happen again, and how to make sure that you're in the most profitable position. Question. I get confused what time frames and levels I should set my buy or sell limits, because on a 5 minute might not be a level, on a 15 minute then it might not be a good entry. Um, Once again, it's what your range is. What are you looking for in terms of your overall trade? If I'm looking for 100 pips, I have to find a range, and there's an article in the Google Drive that says let there be range. I have to find a range that gives me the most opportunity for 100 pips. So if I'm looking here as an example at my 1 hour chart, I have a 1288 to 1295 range. So all I want is 100 pips out of this range. Is that a big enough range? That's 700 pips. So, if you do the math and you say, okay, fine, I want to do math really quickly, and I say, okay, so I want to take 100 out of 700 pips. That's basically 14% I'm looking for. I'm looking for 14%, out of that entire move. So then the question becomes, okay, is it possible for me to get 14%? So when you look at this, you can say, okay, fine, yes. So what I do is I can sit here and I can calculate, here we've got 300 pips out of the 700 pip range. If I believe we're still going up, I know that, if I turn around and I put order here, a sell or buy stop here, and then if I turn around, so we're at 1292.95. So I want to go to 1293. Let's just do that. So there we go. So that would be my start. That would be my take profit. And then I'm going to say, okay, where's my stop loss? My stop loss is probably going to be here, 1291. So right over here. So that would be my stop loss. Okay, so there you go. So I've mapped out my trade. All I have to do is have this candle fill up over here. What do I expect? I look once again, and I look to the left. I see that this was our major area over here of resistance. We have a lot of zones that we're tapping through here, but more importantly, we have a lot of candle bodies here. So more than likely, I should be able to go up, tap that area here, and then close without having to worry about this extra stuff, and I'll be fine. If not, I come back over here and I get stopped. That's okay as well. But I'm erring on the side of, okay, probability out of this whole entire support and resistance area, what could I possibly get out of there, and what can I do at that point? When do you enter a trade? Candle open, middle of candle, candle close. It doesn't matter. I just explained. You're entering a trade based on a pending order. So whenever that candle moves, it moves. I'm looking more at the times of my entry. So I'm looking towards the end of the hour maybe for a push. I'm looking at the beginning of the hour for a push. I'm looking at specific times where the market opens. Session opens 8 a.m. Eastern time for the currency market. 3 a.m. for London. 6 or 8 p 6 p.m. for the Asian session. So you have to map out yourself accordingly. And if I'm looking at the 15-minute time frame, more than likely I'll probably enter towards the middle of the 15-minute time frame where there's a pullback and I know that we're trying to aim to hit that price region and then we're going to eventually go up. So it's really setting pending orders, but if you have to do market orders, you want to dive down into the smaller time frames and say, hey, what makes sense at that point for me to take a trade? But I mean, once again, when you do market orders, you're running the risk of really getting yourself in a position where it's like, okay, 5 minute, um, I take a buy here. And what if the buy pulls all the way down and we go into this region again and then shoots all the way back up? Now you're in a panic because you said, I'm going to take a buy position over here. So I took my buy, so my order would be opened over here, and now all of a sudden we're pulled over here, and now what? So you're already deep in pips, and you don't know what's happening. Rather than, you know what? Let me put a order here, and then let it run up to here. So similar to what I've already done here as an example, this is where I'm placing my order. This is where I'm placing my close, and you know what? If price doesn't get to this point, I don't have to worry about anything. But if it does, we just have to let it ride all the way to the top, and if not, it'll stop over here. So these are things, once again, you have to realize that, as you start to trade and as you start to get more comfortable, put yourself in the best position to win, but looking left to see what makes the most sense as a trader, what is happening, and does that make sense? If I'm saying I want to take a sell stop at this point, I put a sell stop here, take my take profit over here, and you know what? The market turns and goes here, goes over here, taps the middle of this zone here. I've exited. If it goes back up, that's fine. I don't really care. But more importantly, I'm aware of these price zones, which are major price zones on the 5-minute candle, not major overall, but major enough for me to review. And as I start to go back further up, you can start to see here, now we're starting to trail a bit with the 1 hour. The 4 hour, we had this big candle, so this could give us some information here. So when we zoom in, you can say, hey, on the 4 hour, we had a major price rejection now because the 4 hour candle just closed at 10 o'clock, and it looks like now we're going to have that push all the way up again to 12.95 or potentially over to this zone over here. So these are things that you have to be aware of, and as you start to work through your trades, that's what you're looking for. You're looking for different regions of price rejection and how they play out with the other candles. So 4 hour candles, that's a pretty good indication that it's a price rejection because we have this zone over here and now we have touched over here again. So these price levels match up. These price levels match up. There's a reason why things happen the way they happen. It's up to you as a trader to determine what makes sense and what doesn't make sense at that point. Okay. Is there any other questions? This will be posted in the drive as soon as I get off, and we'll go from there. But if there's no other questions, hopefully this was a little bit of informative for you, and it gave you an indicator of like how I trade and what I'm looking for. We saw, a potential winning trade, a potential losing trade, but more importantly, it's understanding the analysis and the follow through and then the process afterwards. Okay, guys, have a good day, and we shall chat.